Hello everyone, welcome to Atomic ACCA's pre-mock exam solving series, and in this video we are moving to section B of Audit and Assurance March 2025 exam. In the previous video we told the initial mentality to keep, that is to cover up the section A questions as fast as possible. Now moving to section B, it's not that we're going to go case by case, rather it's good to always aim for that high marks. But before aiming for that high marks, the first thing to do is we need to pass this paper. So we are going to grab all the easy marks that doesn't require a lot of efforts or reading. So in the shortest time span, how to score the next easy set of marks. The next set of questions that we are going to attempt over here within section B will be topics related to knowledge based questions, that's like the direct theory question or the audit report questions. So we're going to cover these, which is going to be there in all the three case studies. So we're going to find out where this is by clicking next one by one and figuring out where that question is. Now keep in mind, 99% of the time we won't have to do much reading from the case study in order to answer these questions. Knowledge base, mostly it's straightforward. Very rarely we might have to connect it to the case study. Audit report is connected to the case study, but again we don't have to read the entire case study in order to do that. Once we read the question, we'll see what all information we need from a case study in order to answer that audit report question. So let's go one by one. Clicking next. We register the first case study, and keep in mind section B has three case studies, 30 marks, 20 marks, 20 marks, and it will be spread across different requirements. So once we move to the first case study, we're not reading the case study as said, we're only looking at the requirements. Required over here, explain the importance of audit planning. Now we understood that this is question number, okay, 15 questions were done, so this is question number 16. So question 16 is a knowledge based question. We just keep a note of this. Now let's quickly read this and see if it has any connection with case study. If it's supposed to be connected to case study, then don't read it. We'll go to next question. Okay, so let's just quickly have a read over this. ISA 300 planning and audit of financial statement provide guidance to auditors. Planning an audit involves establishing the overall audit strategy for engagement and developing an audit plan. Adequate planning benefits the audit of financial statements in several ways. Explain the importance of audit planning. So they didn't ask you to connect to case study or anything, so we can straight up start writing the answer and finish that 5 mark question easily. Just we can, just to get a start, we can just copy paste this line. Adequate audit planning benefits the auditor financial statement in several ways. How? This is a 5 mark question. If you know the topic, you'll be able to answer it. Generally, if you know it, you will be able to answer. If you don't know it, you won't be even able to bluff this answer. Generally, for a knowledge based question, but audit planning is quite a very general topic. Just imagine that you're an auditor. You're going to a client. If you plan and do an audit properly, what all are the benefits? You'll be able to understand the client properly. You'll understand what all are the risky areas. You'll understand what kind of team members you have to take there. You'll understand when you have to keep team meetings, how frequently you have to keep it. You'll understand where all are the areas that your audit team members have the competency, where all you don't have a competency, so you might have to hire someone from extra, like an external expert. You will understand what all kind of ethical threats are there existing with that client company, and this will give an idea about what kind of quality control review is needed, who you have to appoint as an EQCR. It will help you understand what risky areas are there, and whatever risky elements are there, this can be identified timely, or whatever risky areas are there, this can be focused much. Auditors will not be stranded too much. It will be able to monitor and coordinate the work properly, so proper supervision direction could be there. Whatever issues are there, this can be solved out on a timely basis. You can, auditors can devote areas on more risky areas rather than spending and wasting time on less risky areas. So like very general idea about, as an auditor, if you're going with the proper plan to a client, what all could be the benefit to you. This is what we have to frame here. So number one, first one was understanding the client properly. It will help in better understanding of the client company, their operations, and risky areas within the company and financial statements. Once we understand the risky areas, how is it going to be helpful? Understanding the risky areas will help the auditors to devote more time and effort on these areas to collect evidences to avoid errors in financial statement. What else did we tell? If we understand the client and their operations properly, we'll get an idea about who we have to take there. So proper audit planning helps the audit firm in selecting the right candidates within audit team with appropriate knowledge and competency to deal with the specific client. What else we told related to the same skills thing? If our audit team members don't have proper knowledge or skills or things there are limitations with, this will get give an idea to the audit firm that okay, in certain places we might have to bring up the external people like experts and all. So proper planning and understanding of audit of client will give the idea to audit firm on which all areas an expert advice or external support may have to be seeked seeked okay, that doesn't look like a right word. Which all areas an expert advice or external support may have to be requested for in order to complete or in order to support the audit. Then what else we told? We told about the once the audit starts, it will be easier for managing the audit. It will be easier to direct the team members. It will be easier to keep schedule the meetings. So all that will be a little more easier to do. So it will be helpful for audit firm to properly monitor, supervise, and direct the audit team members in order to make sure that audit work is done effectively. One more point, either you can write it along with fifth point or else you can just make it into 6 point. Only 5 marks were needed, so we're done with 5 marks. But since we just made up that point, if in case any one mistake is there also, just as a backup, before I forget this, because if I think that okay, 5 points are there and only 5 marks are there, I move to next question, most probably I'm going to forget what is the 6 point by the time I come back later on. So if it's not a very big point, just write it quickly and go to next question, so you don't have to come back to this question anymore. So the point we were talking about was scheduling meetings. So proper audit planning will also help the audit firm in order to create appropriate schedules of meeting between audit team members and the client company managers. Now maybe that 6 point could be the wrong one, but it doesn't matter. One extra point is not going to cost you anyways 2 hours of time. It's just going to cost you maybe few seconds or a minute extra, but it can put you on the safer end. So we're done with this particular question, and that was, as said, 16th question is a KB question. Now we're done with that. Next one is 17. This is an audit risk question, so we're not going to do now. 17th one is audit risk. Next one, this is substantive procedure. So 18th one is substantive procedure. We're not going to do. 19th one is discuss the issue and describe the impact on audit report. So we can do this now. 19th one is audit report question. So as said, this will be related to case study, but when we don't have to read the entire case study to get the answer for this, we need only a minimal reading for this, minimal efforts. So we always focus on the tricks to attempt a question. So let's read the question. Discuss the issue and describe the impact on audit report if the issue remains unresolved. Questions for 5 marks. The audit of Jambo company is nearly complete and the auditor's report is due to be signed next week. Your audit work discovered that warranty provision of zero point 0.2 million should be increased to 0.9 million because of the increase in claims from customer. Directors are refusing to make adjustment. First information is we need this small paragraph to read over here. What is next information? This is about warranty provision. So just go to the case study, see where is warranty provision topic. Just have a quick read over there just to see if any insights is there that you need to use over here. Sometimes it would be helpful, sometimes it's not going to be helpful. So we'll just quickly scroll over here. Probably this is the introduction paragraph, so that's not going to be there. Somewhere in between this it will be there. So let's just quickly find out if anywhere we see the word. Okay, warranty, 2 years warranty provision. Okay, it's here. Jambo company provides a 2-year repair warranty to its customers on its phone, of which the manager has created a provision of 0.2 million for it. Okay. To try to improve the profit, Jambo company changed their main material supplier to a cheaper alternative. This has resulted in some customers claiming on their repair warranty. So, because the supplier was changed, probably a cheaper alternative it is, so quality went down, so more customers started asking for warranty claims. So that is the reason why it is to be increased to 0.9 million, but directors are refusing it. Anyways, this paragraph just gave an insight about what was the situation, but to our answer, if you're familiar with writing an audit risk question, we know that there's nothing useful from that paragraph in order for this answer, but that was just done as part of the procedure. The third thing that we need is, in order to calculate materiality figure, we have to go back to the introduction paragraph that is at the top, and we need to find out revenue, assets, profit. It's not that all the three will be there. Whatever is there, we need to find it. So audit senior draft financial statement show a profit before tax of 9.4 million. So I'll just copy paste it over here. And revenue of 15.1 million. This also I'll just copy it over here. What a company has spent 2.2. Okay, that is something else. Okay. So we're done with all our information that's necessary to do that audit report question. Now let's start framing this thing. So first let's just briefly talk about the issue. The problem over here is currently related to warranties. A provision of $0.2 million has been created by directors. A increase to $0.9 million is required due to increase in warranty claims, but director is not willing to do this. So we told what is the issue over here. Let's calculate the the materiality that's involved over here. How to calculate the materiality? It's going to be either 0.5% of revenue, 1% of assets, or 5% of profit. So what all numbers we have here? Revenue is here. So how much is the gap? 0.2 million to 0.9 million means there's a difference of 0.7 million over here, which they are not willing to make. So 0.7 million divided by 15.1 million revenue multiplied by 100 to make it into percentage, this would be equal to 0.7 divided by 15.1, that is equal multiplied by 100. So that is 4.63 percentage. 0.5 percentage is the materiality limit. We already got its 4.6 percentage, which means revenue is enough. Now you don't have to calculate for profit before tax also to claim that it is material. Only one thing has to be met. So 4.63 percentage it is. So 4.63 percentage crosses the materiality benchmark. Hence, the adjustment is a material amount. Now, as per IAS 37, what does the accounting standard say? As per IAS 37, necessary provisions based on reliable estimates must be created in order to comply with accounting standard. It's not mandatory you have to write the as per IAS 37. You can just write as per provisions accounting standard or as per IFRS. Then just write the rule. It's not mandatory to write the accounting standard, but just be careful. If you're writing the accounting standard, write the correct one. Don't write the wrong one over there because it looks very unprofessional in that case. So, in order to comply with the accounting standard, client company must make sure client company must increase the provisions from 0.2 million to 0.9 million. Now, what was the main question over here? If the issue remains over there unresolved, what will be the impact on audit report? If the issue remains unresolved, the audit opinion issued will be a qualified opinion, as the misstatement is material but not pervasive. Why not pervasive? Because it's not way beyond the limit of that 0.5 percentage. It's a judgmental thing, but at least mostly in the audit and assurance paper, we don't generally see a pervasive issue. It's not that it will never come, but mostly it's generally leading to a qualified situation itself. So misstatement is material but not pervasive. The paragraph will be an except for paragraph. Now, the basis of opinion paragraph will be placed right after the opinion paragraph, which will describe the details regarding why a qualified opinion was issued, briefly explaining the matter about not increasing the provision amount related to warranties. So that will be our answer for 5 marks. This one we can remove, we don't need it anymore. So that will be our answer for this particular 5-mark question, and we're done with that. So as I said, we don't need a lot of reading to answer this, just the paragraph above this. Then connecting to that particular topic, what is there in the case study, just read that paragraph if in case something helpful is there. Third main important thing, to calculate the materiality, you have to go to the introduction paragraph, get the revenue, assets, profit figure, do the calculation. If in case it meets the criteria for one thing itself, then stop there. That is material. If in case it doesn't meet, let's say in case it doesn't meet the criteria for revenue, then forget that, do for assets and see if it's meeting there. That also doesn't meet, then forget that, do for profits and see if it's meeting there. Any one has to be met. That is the criteria. Certain times you might come across a question where no numbers are given. Then materiality cannot be calculated based on number threshold. You'll have to be judgmental over there in order to get your answer to see whether it is material or not. So hope that question is done. So we are done with question number 19. So this is over. Okay, this is over. This is over. Now let's move to question number 20. Question number 20 is about direct controls and examples of direct control. So this is again a knowledge based question. 20 is knowledge based. Let's read it and see if it's connected to case study or is it a open-ended question. ISA 315 revised September 2019, identifying and assessing the risk of material misstatement, states that controls are embedded within the components of an entity system of internal control. Controls may be direct or indirect. Direct means those that are directly related to making sure that financial statement figures will turn out to be correct, which means these are controls that are going to make sure things at the assertion level everything is fine, meaning at the financial statement level. Indirect controls means it is generally related to the other operations and things and all going on in the company, and it will indirectly ensure that things within the financial statements are working properly. So direct means those applicable on financial statement. Indirect means things that are like supportive on the direct controls. Now they're asking what does define direct control. We just told that now. So that is one part of the question. And always be careful with the conjunction. Describe three examples of direct control other than authorization. So something else apart from authorization we have to tell over here. And they didn't ask you to connect specifically to case study or anything, so it's an open-ended question. We can directly go forward with this. Question is for 5 marks, so roughly one mark or so we might get, 1 to 1.5 mark maybe we'll get for direct control definition, and describing the remaining three things will get the remaining marks. So make sure to address both the parts of this question, do not miss out anything. So let's begin. We're going to talk about direct control first. Direct controls are those internal controls that are implemented by, designed and implemented. Keep in mind this is not a textbook version of definition or anything, this is normal words, own words. Okay, so based on how you understood, just use the technical terms and convey the meaning. You don't have to put a structured word by word definition from the textbook, because humanly it's not possible to do so. No one can buy heart the entire textbook and go for the exam. So are those internal controls that are designed and implemented by the client company. Now these controls ensure that figures within financial statements are correct. Hence they test controls, or they check controls are efficient. What is the spelling? Efficient at the assertion level. Assertion level means accuracy, evaluation, your completeness, all these things will be proper. That's called assertion level. Now we told what is direct control. Now they need three examples apart from authorization that could be said over here. From our normal technical studies, we have learned four other controls that we can use apart from authorization. Verification is there, reconciliation is there, uh, segregation of duty is there, then the IT controls and all that, physical and logical control, all those are there. Whichever three you know out of this, you can write over here and just talk about it for 1 mark. That is going to be a remaining part for this question. So authorization, oh no, they need apart from authorization. So verification. What does verification simply mean? You look at one thing, you compare it with another thing and see whether this is in accordance with this. This is called verification. So I explain it in your own words. Verification, it means that a check will be done for an item, comparing it with other item for reference. This is basically what verification is. Now to make it little more clear, just give an example for that. What could be a simple example for verification? Let's say payroll expenses are calculated by an automatic system, for example. You can check whether the payroll expense calculated is in accordance with the payroll data, or the payroll, what is that called, master data, because every employee's what salary they are to be paid will be written in that payroll master data. Whatever expenses there in the month should be in accordance with what is there in the master data. People should not be paid less, people should not be paid more either, it should be matching to this one. So we are checking one data in reference with another data. So you can just give that as an example. For example, monthly payroll expenses can be cross checked with payroll master data and confirm that calculations are correct. So this is called verification. Next, two, reconciliation. What does reconciliation mean? Reconciliation means two datas are being compared. Like datas are being changed over here, datas are being changed over here. This figure and this figure should match out. For example, your receivable figure and customers payable figure should match out. Your transactions over here and the bank transactions in the bank statement should match out. This is called reconciliation. So reconciliation means, it means that a check will for be done by comparing two datas that are related to each other. For example, cash transactions happening, or you can say cash balances, cash records maintained at the company can be cross-checked with the bank transactions, bank reconciliation, to confirm the cash balance figures are correct. Done. So that's called reconciliation. Then we told an example of segregation of duty. What does segregation means? You're dividing the roles between different people. Segregation of duty. It is the process by which roles and responsibilities around a particular area, roles and responsibilities around a particular area is, it is the process by which roles and responsibilities around a particular area is divided between different employees. For example, let's say we can talk about inventory example. The person who is purchasing the order and the person who is collecting the order and the person who is noting this down all should be different people. Just for example. So for example, the person responsible for ordering an item with suppliers, the person collecting it, and the person recording it should be different individuals. So we told what's direct control. We told they asked for three examples apart from authorization. So we told three examples apart from authorization. And with that, our question for this 5 marks is also done. So we attempted three 5 marks question in very short span of time without even reading any case study properly. So we saved a lot of reading time. It's not that we are not going to read it at all. In order to do the remaining questions, we have to read it. But our aim, as said, was to crack all the easy marks first before falling into the trap of running out of time. So this is a trick to manage your time if in case you're facing a trouble with it. So we are done with this particular question, that is question number 20. Let's go to the remaining ones and see if we have anything in the next case study. Question 21. In respect of internal control, 5 deficiency control, test of control. So question 21 is related to internal control. Okay. Internal control. Then question number 22 is substantive procedure. Probably we reached to the last one. So here mostly everything will be substantive procedure. Generally that is the trend. So 22 is substantive procedure. Describe substantive procedure. Okay, so 23 is substantive procedure. 24 is substantive procedure. Explain the audit procedures. Okay, so again it's about procedures, so 25 is also about procedures. Substantive procedures. And okay, that was it. So we attempted 3 questions over here, and that was related to our topic which we dealt with, the easy items. Now what we have to do is we have to go back. Let's just take some question over here. Let's say question number 17. Next thing what we have to do is we have to go and do the remaining questions over here. Now what are the remaining questions we have? We have box questions and we have substantive procedure. Most students will be really familiar over here with the substantive procedures, the box questions. So what you can do is you can finish the box questions next and then do the substantive procedure. Or when you're reading a case study, anyways, in order to do the box question you have to read the case study, simultaneously do the case study, box question, and the substantive procedures over there. Next case study, box question, substantive procedures over there. Next case study, if any box question is there, in our case there it's not there, so last one will be all about substantive procedure. So this order also can be maintained in order to do the remaining part of the questions. Hope you have followed with the trick of capturing all the easy marks all the way so far. Now we are going to get into the advanced section of all the tough part of this particular exam. Hope you have followed all the way till here. See you soon in the next video. Bye bye.